But
well, they've been successful for a number of years.
Yeah, what they've been doing is trying to create additional money in the banking sector by pumping in reserves. There's massive levels of excess reserves all around the globe for all the countries.
Explain how that works.
Okay. Banks need reserves. If you bank at Barclays and I bank at Lloyd's and you buy me a drink and I pay you back later, there are financial transfers between you and me and also between our banks. You and me, it's just between our deposit accounts, but for Barclays and Lloyd's to make the transfer, they transfer their reserves around. So reserves in that sense are like the oil that lubricate the transfers between individuals.
Banks should have a minimum of reserves.
But they're actually very tiny. They only need enough, just the frictional stuff, that's all they need.
But they have, under some, like the Basel Accord of Switzerland or some other international body, they need to have some reserve ratio, a percentage of cash on the books, even though it could be minuscule. I think if you did all the accounting, it would be 1% or less.
Well, now it's 20% of GDP in England's case, for example, because the moronic economists who run the central banks around the world, and that, by the way, I'm excluding the Bank of England from that because they're definitely getting their act together, but I'll certainly hold that for Yellen and Bernanke. They believe that if they gave them more reserves, the banks would lend the reserves out. Now, this is the myth that economics teachers shove down students' throats in first year at university and themselves believe that banks actually lend out reserves. And they don't, and they can't. It's simply false accounting to believe that they can do that. So it's all been pumped up. But what it's meant was banks have got all these excess reserves. They try to get rid of them by buying assets off other people, but the money then comes back into the banking sector. The reserves don't change. It inflates asset markets, and they're hoping that the Federal Reserve is hoping that would cause banks to lend more money to the private sector, but it's not happening.
These reserves act like boogers on your fingers. You can't get it off.
Yeah, very much so. I love the analogy. It's almost up to my previous four-letter word.
All right, but 20% of GDP, where did that number come from? In other words, you know, the commercial banks, they're not, the reserves on the books, they don't look at the GDP. They just say that they can lend out versus their official reserves on the books. I mean, the standard model was, you know, going back to the 1920s was 10%. You know, then it was obviously in the modern era, it's gotten using of derivatives and synthetic accounting techniques. It's down to what, 1%. Where did this GDP number come?
Well, it's just the actual rule in America is that they've got to hold 10% of the deposits of the household sector. That's all that the rule is. And that's got no control of the amount of lending they do. What actually controls the lending is the gearing they're willing to have between their equity basis as a bank and their level of loans. And that's where the danger comes in, because in a conservative period, they might want to have like a 10-to-1 ratio between equity and loans. But as they start to get more adventurous, they get to 30-to-1. When you start hitting 30-to-1, if 3% of your loans go bad, you've wiped out your equity base. That's why it's quite dangerous. But reserves are largely irrelevant to that.
Okay, to get back to our point, the 2008 crisis, there was two choices: reform the system so that the lending was more productive, or B, make it possible to lend out even more to kind of paper over this.
And they went for the latter choice.
They went for the latter choice, and now we're at another inflection point, it would seem, where all this debt is accumulating, and right? So you've got the proof right here in the charts.
And this is this one is looking at ratios of private debt to GDP, and the red line is the American